afternoon from Los Angeles. It's Alyssa Corum and Ken Shreve reporting to you live from our newsroom. And on today's show, we're taking a look at two software stocks as well as Tesla and Boeing. But first, let's see how the major indexes did today. We have the Nasdaq finishing down just a fraction, closing well off of the lows for the day, while the S&P 500 finished up about 0.2%, and the Dow led on the upside up about 0.6%. So a pretty resilient session here for the Nasdaq.
Well, no question, considering one of the leading industry groups in the market, one of the leading sectors in the stock market. Software stocks endured a lot of selling. Many closed off lows. That was good to see. But I would say the Nasdaq just down fractionally here in light of pretty big percentage declines for a lot of software leaders. You know, pretty darn good performance for the Nasdaq.
Yeah, and software has been a leading group. So the cause here mainly just profit taking, you think?
Yeah, I would say so. I mean, the software sector, like you said, has been a leading sector in the market for quite a few weeks now, if not months. And a lot of money has been made in software breakouts. We've had a lot of big winners on leaderboard, for example. So probably just some profit taking. But I think the main takeaway today is that you look at the true leaders in the group, and many are just testing their 50-day moving averages. So
that's right.
Yeah.
Let's take a look at a few individual names, starting with ServiceNow. It lost about 4% for the day in above average turnover, but you can see that clear test of support at the 50-day line. It was able to close off the low, as you mentioned, but for this to be considered a buying opportunity, because we do like to see a rebound off of the 50-day line after a breakout as a chance to add on shares. But what do we want to see here before that can happen?
Well, I mean, the most important thing when a stock comes down to its 50-day moving average for the first time after a technical breakout, which ServiceNow is doing right now, you want to see a bounce with conviction. You know, it's good to test the line, and we saw that ServiceNow came down to its 50-day moving average today, closed slightly off its lows. I mean, it really would have been a bullish close for ServiceNow if it had closed, for example, above the 240 level. So it closed in the bottom half of its range. It's testing support at the 50-day right now. But again, when a stock comes down to the 50-day, it's always best to see a conviction bounce, bona fide buying in heavy volume, and that's ideally what you want to see.
That's right. And I've gotten some questions on social media about how to handle that bounce. Are we giving ourselves the normal 5% wiggle room on the bounce? I mean, you want to be buying as close as possible when it does give you that conviction.
Yeah,
bounce.
exactly. I mean, there's really not a set buy point when a stock. I mean, you could always use the 50-day moving average price as a buy point. So you want to buy as close to the 50-day line as possible. Typically, that 5% buy zone we use when a stock is breaking out of the base, there's a identifiable buy point, and you never want to chase a stock when it moves more than 5% from a buy point. So the bounce off the 50-day is kind of more art than science, but just buy as close as possible to the 50-day line, and make sure you're buying when there's clear buying demand in the stock.
Sure, and support still in question here, especially when you look at that weekly chart. So we'll be keeping an eye on ServiceNow, definitely.
Yeah, I mean, ServiceNow closed off its lows, so that's a positive. It did close in the bottom half, but nice move off the 50-day.
And Paycom Software, another software name, lost about 3.4% in above average turnover today, but not too much technical damage to the chart.
No, I would say it is a heavy volume, higher volume decline for Paycom, which a lot of the software stocks look like today. But you can see it's still holding comfortably above the 50-day moving average. Hasn't even tested the support level yet after a bullish gap up and breakout from that cup-shaped base. So we'll see if Paycom tests the 50-day, but I think, again, the main takeaway with software stocks today, many are testing their 50-day lines for the first time after a breakout, and that's pretty normal action. We'll see if they can bounce with conviction.
Right. And elsewhere, we saw Tesla shares drop over 8% in heavy volume after it announced that it sold less cars than expected in the first quarter. Also, Tesla's already said that it could report a loss in the first quarter. So fundamentals still in question, and a gap down for the stock today. But even before today, clear resistance and a downtrend for Tesla.
Yeah, I mean, the stock has been in a downtrend since basically late last year, and Elon Musk, the CEO, was in court today. His contempt of court hearing regarding the monitoring of his tweets are supposedly supposed to be monitored. So Tesla's just a good example of why it's very dangerous buying a stock when it's on a downtrend. So you can see it's been a pretty pronounced downtrend for Tesla for many months now, and you mentioned the resistance at the 50-day moving average, that red line there, and shares were weak again today amid very cloudy fundamentals for sure.
That's right, and a lot on Wall Street like to advocate for the buy low, sell high. Some may even say Tesla stock is cheap right now, but it's really just like trying to catch a falling knife.
Well, it is, especially when you have a very cloudy fundamental outlook. In many companies' cases, you've got a good track record of growth, you've got good future growth prospects, you've got increasing market share. It's you can kind of wrap your head around a company's fundamentals. With Tesla, there's just a lot of moving parts.
Right.
New cars, production data, just people aren't really sure what profitability is going to look like here going forward. So a rough day for Tesla today.
Definitely, and we want to cap things off with a look at Boeing shares, up almost 3% today in slightly above average volume, but after losing support at the 50-day line, it's now hitting resistance at that level.
Yeah, so a lot of people asking, has Boeing hit a bottom? Is the worst over? And it was a pretty sharp pullback amid the 7 negative headlines around the 737 MAX jet. So this is a stock that has done a good job rallying. You can see over the past 2 weeks or so, a lot of the gains have come in pretty light volume after pretty clear signs of institutional selling. But Boeing, still has to get above its 50-day moving average in that 400 level. That would improve its technical health, but still a challenged stock at this point.
And with the declines that we have seen in this stock, how valid would you say is that prior buy point? Because I think that's a question that a lot of people have is, okay, it's retaking this old buy point, but is that buy zone really still valid at this point?
If it triggered a sell signal, I'd have to look. I know the stock hit a low of 361. So if it fell, 8% below the most recent buy point, that would really invalidate the buy point. So at this point, I think we just want to see if Boeing can retake the 50-day, build the right side of a base, and then see if it can stage a new breakout. That's probably going to take some time to happen. We'll see what the 737 MAX jet headlines eventually look like. But I think the consensus with Boeing is that the software fix that they're going to be submitting to the FAA in coming weeks is probably going to be enough to put these jets back in the air. And I think there's some optimism that that's going to happen, which is why shares have been rallying.
Yeah, and the first hurdle, retaking that 50-day line.
Yeah, exactly.
All right, everyone. Thank you for watching today. Be sure you're heading to investors.com for all the latest stock news and analysis. And just a reminder that our latest Investing with IBD podcast episode has dropped for this week. So make sure you're heading to investors.com/podcast for all the details on that. And you can also follow us across social media, whether it's on Facebook, Instagram, YouTube, or Twitter, to stay up to date with all the latest. Thanks for watching, and we'll see you back here tomorrow.